This episode is presented by Invest Puerto Rico. If you believe your business can go anywhere, Puerto Rico is the place. Hello, and welcome back to Equity, TechCrunch's flagship podcast about the business of startups. I'm Marianne Azevedo, and this is our Wednesday episode where we hone in on a trend in the startup world and dive deep. Today, we're talking about a number of topics, including how generative AI could level up SaaS, the state of consumer investing, and what we can expect from the next wave of fintech. Joining us for today's conversation is NEA Ventures General Partner Vanessa Larco. And just a heads up to our listeners, you can probably hear some drilling in the background. I apologize in advance. You may be hearing more of that as we're recording. There's some construction going on around me. Apologies, but that is the perils and the fun of recording remotely. Anyway, Vanessa, welcome to the show. We're so happy to have you here. How are you?
Thanks for having me. I'm good. I'm so excited to be on this podcast.
No, we're thrilled as well. I first want to start out with just a little bit about your background. You've been at NEA, which is short for New Enterprise Associates, right?
Yes.
Since 2016. And you focus on seed, early stage, enterprise, and consumer mostly. Is that right?
Yep. Basically everything at the app layer and at the seed Series A is where I spend most of my time.
So prior to venture, you actually led product teams, right, at a few companies, including some names we may have all heard of, like Box, Twilio, Disney, and Xbox. Getting into venture, it seems like, was not necessarily something you expected or planned to do. But I was reading about the role model that you have in your mother, and I was fascinated by this story. So she was into computer science. Would you say that that's right? Can you share a little bit about that?
Yeah. Well, she grew up in Barranquilla, Colombia. And her father had a juice factory, actually several different food factories, but the juice was one of the bigger ones. And she loved to go to the factory with him. And she started programming some of the machinery very early on. She excelled in math and science at school. And so when she graduated, she wanted to come to the United States and study computer science. And her parents nearly had a heart attack. They were like, no, you need to go to like finishing school in Switzerland and know how to like plan parties and cotillion and all of that. She was like, no, my brothers are going to the US to study engineering. I want to go too.
Good for her. And that was in the 70s, right?
Yes. And that was not something my grandfather had envisioned for her, but she decided to put herself through school since she didn't have a ton of support for that career path from her family. So she went to FIU, Florida International University in Miami, and studied computer science in the 70s.
Wow.
Which is wild.
Yeah, that's awesome. And then so she became an entrepreneur?
Yeah, I was asked her, I was like, well, why did you want to do startups? She's like, well, hang on. Like, I didn't really think about it. I didn't have much of a choice. I had a computer science degree out of Miami, and I couldn't leave Miami because my family, my friends, her English, she has a very, very thick Hispanic accent. And so she's like, there was no computer science jobs in Miami. So I decided like, well, I'm going to have to fabricate them. And so she started companies because she wanted to live in Miami and there were no CS or software jobs in Miami. So she was going to make it work somehow. It was really out of necessity, not out of being a founder is cool. And everything was bootstrapped. So she'd never heard of venture capital actually until I started in venture.
That's so impressive. So yes, back to that. So you kind of ended up, would you say it was accidental that you became a venture capitalist or?
Yes. Yeah, it was, I don't know what accidental. It came out of nowhere. It was one of those, like, sometimes you get this opportunity you never saw coming or planned for it. And you can decide to take a leap of faith, or you can move on and continue on the path you'd chosen. And most of the time in my career, I've always just put blinders on and just very focused on, I want to work on these types of products. I want to work at these types of companies. I want these types of experiences. And it's just very focused. And when this NEA opportunity came up, I initially laughed it off. And I was like, well, no, I'm not a finance person. I'm a product person. I build things. I ship things. That's what I do. I don't know anything about finance. So I don't know why you would want me to be in venture. And really, Pete Cincini at NEA convinced me. He's like, look, I will teach you everything I know. I really think you will like it. Don't just laugh it off. It's a real offer that a lot of people would be happy to get.
Yeah.
And it's just the gravity of it just didn't sink in for me and what kind of an opportunity he was offering me. And then I spent time with him and Forrest Basket and Scott Sandell It took a couple months to really think through it before I decided to join. What really put me over the line on like walking away from product when I was having a really good time was I wanted a different perspective on how to build software. And truthfully, from a PM perspective, I would see TechCrunch news and this company got this valuation and that company got this other one. And it honestly, as a PM leader, like it made no sense to me. I was like, well, this company has an amazing product. Why is their valuation so much lower than this other one that's just a terrible product? And like, yeah, they're growing quickly, but people hate it. So like, how long are people going to retain on this, piece of junk? And it just didn't, I'm like, what are these VC people thinking? Like, what world are they living in? And so
That's
it just
funny.
felt so foreign that as I thought through the offer and as I spent more time with them, I'm like, okay, you know what? I'm going to do this. I'm probably going to do it for 2 years. And I just want to learn how these people think. Like, why is this company worth this and this other one is not? I want to get better at understanding that. And also, ideally, picking which companies or be getting really good at figuring out which companies are going to break out.
Mm-hmm.
Because that'll be a great skill for me if I go back to product or for me to be able to help my friends and my family that are in software development, like which companies they should choose. And I just thought that that would be a great skill set. Honestly, I didn't think I would stay in it for very long. I thought 2 years and I'd go back to product.
Yeah,
and
here we
almost
are.
8 years later.
8 years later, right?
8 years later.
Well, over the years, you've invested or led investments in a number of companies, including, Assembled, Kindred, Rewind AI, Clio, Evernow, Majuri, and you're a board observer at Forethought, SafeBase, Orbi AI, Heavy.ai. So a lot of companies. You're also a board observer at Robinhood, or you were until its IPO in 2021, and an early investor in Greenlight. So, wow. So I would like to hear, because I read a recent post of yours about SaaS and how generative AI is going to potentially impact its pricing model. Tell us about that.
Yeah, I mean, it's not rocket science. I think if generative AI is really supposed to make you more efficient, and we're seeing that it actually delivers on that promise, right? Previous generations of SaaS, who knows, right? Does Slack make you more efficient? Still up for debate,
less
right?
efficient, less efficient.
But SaaS was always like, we're going to make you more efficient. We're going to drive productivity, and the verdict's out, and it's been out. But with generative AI, we're actually really seeing it, right? And in certain jobs, it's very quantifiable, right? In customer support, it's very quantifiable. In outbound sales, it's very quantifiable. Even in marketing, now that it's generating copy, it's very quantifiable how it is helping people become more productive. And so when you look at the SaaS model is per user per month seats, right? Mm-hmm. And so your natural expansion, when you look at your net dollar retention for a SaaS business, you want to see it like over 120%. And the way that happens is every year your customers are supposed to be growing, so they're buying more seats. So naturally, those accounts are expanding, and that's how you get your NDR above 120%. Now, if you're really making people that much more productive, they're not going to need that many seats time over time.
Right.
They're just not going to need those seats. So the more it works, typically the less seats of that thing you need. Those people might be doing other jobs, but for like that job, you may not need that many seats. So the best you can hope for is 100% net dollar retention. And like, that's not a great model for SaaS. So you really need something above that. Mm-hmm. I think that therein lies the problem. If it's subscription and you're banking on these seats expanding and the seats aren't expanding, then what do you do?
Right.
And that's the question.
Yeah. I mean, it's a fact that funding into SaaS and enterprise software companies is down. Crunchbase issued a report recently and noted that so far this year, this was as of end of May, I think SaaS and enterprise software companies had raised $4.7 billion in seed through growth stage financing. That compared to last year total of $17.4 billion. So, I know we're only halfway through the year, but that's still seems like a significant drop. And if we look at the chart, it just keeps going down from 2021, down 2022 into this year. So it does make sense that, something's going to have to change, especially now with AI coming in. And you pointed out too that, it is going to reduce the number of employees at companies. So yeah, this per seat model just may not be the best way to go in the future.
Yeah, I don't think it is. I think the most obvious one that everyone's moving into is consumption-based. So how much of this software do you use? And then based on that, we'll charge you. And that's great. So if you're using it a lot, then people should feel not that bad paying for it. And if you're using it very little, then you don't pay very much. And like, great. I think where people aspire to get to is value-based pricing. This is really, really hard. So I think it's a North Star for a lot of different SaaS products. But imagine if I say, for every customer support ticket that we solve where our NPS is above blah, we pay us half what it normally costs you to solve a ticket by a human. And if the NPS is worse than a human answering it, then like, don't pay us at all. And so then there's like very little downside for the customer for using this. And then when they do use it, they're like, yep, like basically it's take a percentage of whatever money you saved me, and that's what I will pay you. And the rest I'll keep as my savings. That when you can fit your SaaS product in pricing like that, I think it's extremely powerful. I also think it can be a competitive moat.
So would you describe that as value-based pricing then?
Yeah, but it's not trivial. But after I did that LinkedIn post, my cell phone blew up with like people that are buyers and CROs, and everyone's like, here's why it would be great, but here's why it's so hard. And there's a lot of challenges to that.
My first thought is, wow, that does sound really cool, but it's so much less straightforward, right? It's so much harder to like, how do you quantify value or outcomes? And I know you mentioned like cost savings, customer satisfaction, metrics, things like that. But being so much more complex, do you think companies will be more hesitant to adopt that or go that route?
It depends. I mean, everything, it depends. It's in the details. But for some, it's very obvious. The hard part is, let's say, retention. If we increase your user retention by this percentage, then you pay us a fraction of like that lift. But now you set a new baseline. So like, that's like year one. But what happens year 2 and 3 when I've already set the baseline here? How do I move the baseline up from there? And that's, I think, complicated. For the buyer, it's also complicated because they're like, I don't know how much of my traffic is going to go through here. I don't know how to budget for this. So I think there will be you might install some blocks up front. You may want to do potentially like half platform fee, which is subscription based on the size of the company, and then some incremental blocks on top of that based on usage or value driven or something. I just think that historically in SaaS, I mean, it's called SaaS, right? So like your business model is like, you don't even think twice, per seat, per user, per month, done. And now I think it behooves every founder to really think through like, what is the right pricing model for our customer and for our product, and iterate on that. I think that's going to be part of your product development roadmap. Now you also have to think through your pricing and packaging as a roadmap as well. Mm-hmm. It's not just a given that it'll be per user, per seat, per month. Like I just think that those days are behind us. I don't think it's too early to say that.
Interesting. Okay. But as an investor, when you look at investing in SaaS companies, isn't one of the things you look at this predictable recurring revenue? Wouldn't it become less predictable if you go this route?
Well, yes, but it's not great to be predictable and then have an NDR of 100, right? Like that's not great either. So you do have to show expansion and growth. And so I'd rather see you grow and I'd rather see your margin. So the other thing is if you're using GenAI APIs that cost you per call and then you're offering it as much as you can eat per user per month, then like your margins suck. And so you need to have a business model that creates a durable business. And so I do think investors need to stop being a little lazy and being like, recurring revenue is the best. No, I think recurring revenue is not always the best if there's no account expansion, if the margins start deteriorating with more usage, et cetera, et cetera. So I think that historically, yes, we want to see that recurring revenue, but the truth is we just want predictable revenue. Mm-hmm. And if the founder can get really sophisticated about how they can model out and then be pretty spot on that predictability, that's just as good, in my opinion, as recurring revenue.
So it sounds like, obviously, despite some of these declines in funding, you're still bullish in the SaaS space.
Of course. Of course. I mean, that's the beauty of being in technology is that things are always moving. Things are always progressing. And well, historically, the incumbents fall behind and it creates opportunities for people with new perspectives and new ideas to capture the market. So yes, I think there's always a new wave. There's always a new wave. That's that's what keeps us all very entertained and employed.
Well, yesterday, the day that we're recording this was the day after Apple made all its huge announcements, and Apple Intelligence was one of them. So I'm curious as to what your thoughts are on what that means for software for startups and founders in general?
Look, I think that the surprising thing to me in the last year and a half is how fast the incumbents have moved. When OpenAI slashed GPT-3's pricing and all of a sudden everybody could consume a lot of it and not tank their margins, it was like a free-for-all. It was, every day some like legacy company was launching some generative AI feature in their product. And that's why I was like, well, yes, this is a new wave of technology, but unlike, web to mobile or unlike on-prem to cloud, you don't have to re-architect everything. You don't have to rebuild everything from scratch to adopt this new platform. You just integrate these APIs. And so it's made it really easy for the incumbents to just fold a lot of this stuff in, and they have all the really interesting data. So they're moving fast. They're moving way faster than I've ever seen an incumbent move. And it's made investing in this space hard. And I think for founders, it's not for the faint of heart to jump into starting a company in generative AI these days when you're seeing the incumbents move so quickly. But I still think there's always going to be opportunity. And the reason is, well, one, I think incumbents are really stuck into the categories that they dominate. And I think those categories may not make sense when software can go beyond those categories. So I think companies that are creating net new categories that are really more in line with the outcomes businesses want have a shot at it. I know it sounds a bit nebulous, but I can go into that in a bit. And then I also think that as I was looking at Apple's announcement, especially versus Google's, I was like, well, some of this makes sense to have it all in one, but I want to dig into some of the permissioning and security. And like all of a sudden I'm like, well, who do I want to know about what? Like, do I want Apple to know about my Amazon purchases? Do I want Amazon to know about my calendar? Like, who do I know? Who do I want to know what about me?
Right. Well, have you seen startups in your portfolio or some that you were considering investing in that got kind of eaten alive by an announcement by an incumbent?
I think it's too soon to say anything gets eaten alive. I think they'll shift. I think the value prop will shift for a lot of companies in our portfolio, or the messaging. But I think there's still some unique insights, some ability to move faster, so the ability to be Switzerland and go across apps over time versus just being in a set ecosystem like Apple, although Apple's being pretty clever about how they approach that. But I think that there's some value sometimes in not being the walled garden, per se. So I think we'll see some changes, and founders are very rapid to adapt, and that's what makes this industry so fun.
Yeah, absolutely. Well, we're going to take a quick break here. When we come back, we're going to get into the consumer space and all your exciting thoughts there. What's next in tech? That's not the right question. It's where? Puerto Rico, where an entrepreneurial ecosystem pulses with connectivity, capability, and possibility, where the most competitive tax incentives in the U.S. fast-track success, and hard work is rewarded with sunsets and turquoise waters. If you believe your business can go anywhere, Puerto Rico is the place. investpr.org/TechCrunch. All right. Recently, I spoke with Yuri Kim at Forerunner Ventures, who is very bullish on the consumer space. And she pointed out that consumer as a whole has outpaced enterprise. What are your thoughts there? I know you've invested in consumer startups. One of the ones we first talked about years ago when I was at Crunchbase News was Majuri, a direct-to-consumer jewelry startup that's still around. And I visited its brick and mortar, retail shop. What do you think? What is the state of consumer these days?
I spent the first half of my career in gaming, which is deep consumer world. Then I went in, I got very tired, burnt out. It's very hard to stay in gaming long term. And then I went into enterprise software. And when it came to NEA, I said, I'm only going to focus on enterprise. I will never do consumer. Never say never. I was like, okay, fine, I'll do one consumer deal. And then I was like, well, I'll do like this other one because it's incredible. And then slowly but surely, I built out a consumer portfolio, even though I swore I would never invest in consumer.
Well, you couldn't help it, I guess, right? And how have those companies done?
Okay, well, I don't want to be that VC that says like, my portfolio is on fire, but they've done really well. And when consumer does well, it does well really fast relative to enterprise. And so a lot of the time people look at my portfolio, everyone thinks I'm a consumer investor because they recognize a lot of the names on there. And I'm like, no, I'm actually an enterprise app layer investor that does consumer like as a side hustle. And then I finally just dropped the side hustle thing because about half my portfolio now is consumer and the other half is enterprise. So I'm bullish on it. Look, I think the consumer is always going to spend. They just are. It just depends on like what they're going to spend on, what their priorities are. For me, I'm kind of embarrassed to admit this. I'm a bit of a couponer. So I like a good deal. I never like to pay full price on anything.
Same.
And if you look at my investments, it makes a lot of sense. Like you would start with like Robinhood, right? I didn't source it for NEA, but I knew the Robinhood founders from like eons before I joined NEA. So when I joined NEA, we started working much, much closer together. But at the time when I met them, I was like, this is great. I'm trading on Fidelity and I'm only trading these 50 ETFs that have zero commission because I don't want to pay commission. And I was like, I can trade like any US equities with no commission. That's amazing. I'll save $7 a trade. And then with Majuri, I was like, oh my God, I get to buy this real gold necklace for like $200 and anywhere else would be like 500. Also, anywhere else is like Macy's because I can't afford Tiffany's or Cartier.
Yeah.
So I don't know, as I looked through all of it, it was just like, this just makes so much sense for someone that is, I don't want to say price sensitive, but you know, you want to make your dollars stretch as long as they can go. I think that's just some people really care about that I happen to be one of them.
Yeah. I mean, I think the majority of the population, at least here in the US, is price sensitive, right? Like we have to worry about things like that, trying to save money where we can. And so I think from my humble perspective, that all seems to make sense because it sounds like you're looking to back consumer startups that might appeal to the masses, right? Or am I?
No, that's 100% right.
Yeah. And that seems to make sense. Like, that's what I was going to ask you. What do you think it takes in this day and age for a consumer startup to be successful?
Well, I think like let's subtract social media out of the equation because I don't quite understand social media investing. So that's the one area I don't do very much in at all. But I think the value to the end user has to be very clear, just like super clear. What am I getting out of this? You know, I led Kindred Series A. And for me, it was like, well, gosh, Airbnb, I have now 3 kids. We like to stay in Airbnbs because I need a kitchen. And Airbnbs are just like wildly unaffordable. And when I go, it's like, all right, let's go for 3 days. You incorporate cleaning fees. You're like, whoa, how much are we spending on this? A hotel would be so much cheaper, but so much more inconvenient because I don't have that kitchen. And so I looked at Kindred and I'm like, oh, sweet. I can give a night to get a night. So I can like go to New York and stay in a Kindred home for a couple $100 for the week. Like, that's amazing. I would do that all day. All it takes is someone else to stay in my house. Like, sure, have at the crib, the rocker, the changing table. Enjoy, you know?
Right. Yeah, no, I hear you. We've been looking at Airbnbs and I'm like horrified every time I see the final numbers there. I'm like, this is just nuts. But yeah, no, I can relate to that. So yeah, I think that sounds interesting. So it sounds like your ethos in looking at consumer startups kind of spilled over into your fintech investments. And you were an early investor in Greenlight as well, right?
Yeah.
The debit card for kids or teens. So how much fintech investing do you do these days?
Well, I love fintech for many reasons. One, I felt very fortunate that my mom taught me a lot about personal finance at a very young age. And I felt like that was my secret superpower when I was in college and even after college. And so I also like finances for the masses, ways for people to save money, ways for people to build financial literacy. And that's why I like this category, because it's a way. So on one hand, we look at a lot of my consumers, it's like, how do you have all the fun experiences or all the things you want at a more affordable price? And then the other half is like, well, how do you generate more money so that you can go do those things you want to do? And so for fintech, for me, that's that part of the equation. So yeah, so I for me, Greenlight made a ton of sense. It's really about teaching young people financial literacy, teaching them to save, teaching them to budget, teaching them about compounding interest. There's quite a bit that's in there. And so that's what really attracted me to it. Also, I never carried cash and I needed a way to bribe my niece. So that was the easiest way to send her money.
Yeah.
So that worked. You know, I think fintech's had an interesting period of time the last 2 years. I'm still bullish on it, but a lot less so on like neobanks.
Mm-hmm.
I think that's okay. We've been there. We've done that. Like, what's the next generation? And I'm not quite sure what it is, but I do think it's probably something about being entrepreneurial And I'm seeing some really interesting companies that are enabling the content creators, probably the wrong word, but people that are creating their own businesses of one or two, or maybe a couple, even brick and mortar businesses, people that are starting their own shops. There's some really interesting fintech tools, I think, for like the small entrepreneur, like the small team entrepreneur. And beyond savings and beyond trading equities and generating wealth by growing wealth, I think there's like, how do you generate wealth by being entrepreneurial, selling a service or selling a product? And I think there's some really big opportunities there. And I think they'll probably follow the same parallels that we saw, like personal consumer finance, when we look at like SMB finance, like really, really capital SMB. And so I'm getting really excited about some of the stuff I'm seeing there. And they're all like early seed, pre-seed, but I'm very excited about the next wave I'm seeing coming.
That's super interesting to me. I know, I feel like definitely fintech has had its ups and downs, but good to hear that you still feel like that there's going to be a next wave that will include a bunch of interesting companies. That's good news.
Marian, I feel like there's always a next wave.
Yeah.
It's like the one thing it's taught me. It's like there feels like there's always the next wave. Well, so there will be one. The question is, what is it going to look like?
Yeah, that's true. I mean, and I'm just curious, how has it been for you to watch Robinhood evolve over the years? Did you ever expect it would grow to this size and do all the different things that it's doing?
I mean, I think we always hoped it would. I mean, ever since the beginning, I remember they're like, we're going to be the Charles Schwab for like our generation. And so we're going to look nothing like them, but like we're going to be as meaningful, as impactful, as disruptive, because Schwab was disruptive for like, I think my parents' generation. And like, we're going to be that for like our generation. I was like, yeah, we need our own institution that like reflects us and who we are and what we want. I was like so millennial in like my late 20s, early 30s. And it's incredible that it has turned into that. I mean, it's also had its ups and its downs, and no company's journey is perfect, but it's been incredible to have been alongside of Vlad and Beju through all of it. And really through all of it. And I would say that they're just some of the most incredible product and business thinkers that I've ever spent time with.
Well, unfortunately, because I've been having so much fun talking to you, Vanessa, we are just about out of time, but I want to give our listeners a chance to find you online. How can they find you on the internet and connect with you?
Yes, actually find me on LinkedIn. I'm very active. My little bubble is always green. So shoot me a note.
Okay, great. Are you on X as well?
You know, I am, but I'm more of a lurker.
Yeah.
And I'm very intimidated by what X has turned into.
I know, it's changed a lot.
It's changed.
Not quite the same.
And my whole feed is Elon Musk these days. So I'm okay.
So LinkedIn's the way to go if you want to talk to Vanessa. Awesome. Well, thanks so much again for joining us on the show today. I've really enjoyed this conversation. And to our listeners, you can always find me on X. I'm still there at Bay Area Writer, and Equity on X and Threads at Equity Pod. And never fear, Haya, Becca, and I will be back on Friday with our weekly news roundup. So talk to you then. Bye. Equity is produced by Teresa Loconsolo with editing by Kel. Bryce Durbin is our illustrator, and we'd like to give a big thanks to our audience development team and Henry Pickavett, who manages TechCrunch audio products. Thanks so much for listening, and we'll talk to you next time.